Welcome back to BitcoinDorks. Today, we're delving into a statement that's been making waves in the crypto community: SEC Chair Gensler's remarks on the prevalence of scams and fraud in the crypto market. Let's dive in. SEC Chair Gary Gensler recently made headlines with his comments on the crypto market, highlighting the significant presence of scams and fraudulent activities. Gensler's remarks come amid growing regulatory scrutiny and calls for increased investor protection in the crypto space. But what exactly did he say, and what does it mean for the future of cryptocurrencies? During a recent appearance before the House Financial Services Committee, SEC Chair Gary Gensler's remarks on the state of the cryptocurrency market sent shockwaves through the industry. Gensler's emphasis on crypto's outsized share of scams and fraud within the broader financial markets highlighted a pressing concern that has long plagued the industry. His remarks underscored the urgent need for regulatory intervention and investor protection measures in an environment where bad actors thrive and unsuspecting investors are at risk. Gensler's comments shed light on the inherent vulnerabilities of the crypto market, where the lack of regulatory oversight and investor protection leaves investors exposed to exploitation and manipulation. Without clear regulatory guidelines and enforcement mechanisms, investors are susceptible to fraudulent schemes, Ponzi schemes, and other illicit activities that have tarnished the reputation of the entire industry. Gensler's warning serves as a wake-up call to regulators and policymakers, urging them to take decisive action to address the systemic risks and vulnerabilities inherent in the crypto market. As cryptocurrencies continue to gain mainstream acceptance and adoption, regulatory authorities must step up their efforts to establish clear rules of the road and enforce compliance to protect investors and maintain market integrity. In light of these concerns, Gensler's remarks signal a potential shift in regulatory approach towards cryptocurrencies, with increased scrutiny and enforcement likely on the horizon. While some may view this as a threat to the industry's growth and innovation, others see it as a necessary step towards ensuring a level playing field and fostering investor confidence. Gensler's remarks have ignited a heated debate within the crypto community, stirring up contrasting opinions and perspectives on the role of regulation in shaping the future of cryptocurrencies. On one side of the spectrum, proponents of increased regulation argue that it is necessary to weed out bad actors and protect investors from fraudulent schemes and illicit activities that have plagued the crypto market. They contend that regulatory oversight is essential to instill confidence in the market and attract institutional investors who may be wary of entering an unregulated environment. Moreover, they argue that regulation can provide much-needed clarity and legitimacy to the industry, paving the way for mainstream adoption and integration into traditional financial systems. On the other hand, opponents of excessive regulation warn that it could stifle innovation and hinder the growth of the crypto market. They argue that the decentralized and borderless nature of cryptocurrencies is what makes them unique and disruptive, and excessive regulation could undermine these fundamental principles. Moreover, they caution that overregulation could drive innovation and talent overseas to more crypto-friendly jurisdictions, depriving the United States of its competitive edge in the rapidly evolving crypto landscape. The debate over the appropriate level of regulation in the crypto market is not new, but Gensler's comments have brought it to the forefront once again. As regulatory authorities like the SEC grapple with the challenge of striking the right balance between fostering innovation and protecting investors, the future of cryptocurrencies hangs in the balance. In the short term, Gensler's comments have the potential to fuel uncertainty and volatility in the crypto market as investors grapple with the implications of potential regulatory crackdowns. The mere mention of increased regulatory scrutiny from a prominent figure like Gensler can send shockwaves through the market, triggering knee-jerk reactions and panic selling as investors rush to mitigate their exposure to perceived regulatory risks. We've already witnessed how regulatory announcements, whether positive or negative, can cause wild price swings in crypto assets, with prices soaring to new heights on favorable news and plummeting to new lows on adverse developments. Gensler's remarks are likely to amplify this trend, exacerbating market volatility and testing investors' nerves. As investors digest the implications of potential regulatory actions, we can expect to see heightened uncertainty and speculation in the market, with prices fluctuating wildly as sentiment oscillates between fear and greed. Moreover, the lack of clarity surrounding the scope and timing of potential regulatory measures only adds to the uncertainty, leaving investors in a state of limbo as they await further guidance from regulatory authorities. While Gensler's comments may contribute to short-term uncertainty and volatility, they are unlikely to derail the long-term trajectory of the crypto market. In fact, some argue that increased regulatory clarity and oversight could ultimately benefit the industry by providing a more stable and secure operating environment, attracting institutional investors and mainstream adoption. Ultimately, how the market reacts to Gensler's comments will depend on a multitude of factors, including the broader economic and regulatory landscape, investor sentiment, and market dynamics. While short-term volatility is to be expected, savvy investors understand that it's the long-term fundamentals of the crypto market that ultimately drive value creation and sustainable growth. As such, while Gensler's comments may cause ripples in the short term, they are unlikely to alter the overall trajectory of the crypto market in the long run. In conclusion, SEC Chair Gensler's comments on the prevalence of scams and fraud in the crypto market have sparked a heated debate about the future of cryptocurrencies. While increased regulatory scrutiny may bring short-term volatility and uncertainty, it could also pave the way for a more secure and mature crypto industry in the long run. That's all for today's video.